Hi, everyone. Welcome to the Canadian Passive Investing Show. I'm your host, Ava Benisaki, and I'm joined by my co-host, August Vinneys. We have another incredible show for you today. Please like and subscribe as it helps us build our channel and allows us to keep bringing you great content and expert guest speakers. Now, our mission is to empower investors to earn passive income through real estate investing. Today, we are joined by Vinney Chopra. Vinney Smile Chopra is a real estate investor, syndicator, international best-selling author, host of 4 podcasts, multifamily educator, mentor, and dedicated husband of over 40 years, and a father of 2 children, Neil and Monica. Vinney came to this country with only $7 in his pocket and a dream. Vinney now has built a portfolio of over 4,500 units, amounting to over 440 million in the multifamily, senior living, senior assisted living, and hospitality arenas. He is passionate about helping others achieve financial freedom and give back to our seniors who have given us so much. So we believe that Vinney will bring tremendous value to people who take life and business too seriously and don't smile in the process. He's going to bring great value to passive and active investors who can take pointers from Vinney on all topics related to real estate private equity and how to be a great mentor. So welcome our friend Vinney.
Welcome.
Oh my gosh. I'm so excited. I can't hide it.
I love it. You know what, Vinney, it's so great to have you on our show. We've been so excited to have you. So maybe you can just please start off by telling us about your background and how you got started in real estate investing, please.
Surely. I'm from India originally. I came to this country with a dream and with a little bit money, $7. I'm an engineer, mechanical engineer, and I always wanted to be one, breaking all the toys when I was young, growing up, to see what's inside. But I came to George Washington University many months ago and did my master's in business administration sales. It just so happened, I happened to be invited to go sell books door to door. That's 80 hours a week, knocking on doors, and walking all day long to sell encyclopedias and children books and Bible even. I'm a Hindu, but I sold Bibles, Nave's Topical Bible, Home Religious Library around Atlanta, Pulaski, and South Carolina. Like 3 summers I did that. But then we got married. I've been married 41 years, happily married. We live in the Bay Area now, San Francisco, Danville, Black Hawk area. And 2 children, Neil and Monica, our pride and joy. Neil went to Berkeley. He did EECS, electrical engineering, computer science. Monica went to UCLA, did political science and MBA like that. So she's now our VP of operations and investor relations. My wife is also involved, and I'm involved a lot with all the companies. But, it really all started with single family homes, like majority of the people do. But we found out soon enough, after 35 years of investing in single family homes, that we couldn't really scale up that fast. So about, I would say 16 years back, I became broker. I'm a California broker, actually, real estate broker, even now active, but never sold or bought anything, actually. I became an investor. And then I could really talk to brokers in their language when I went to Georgia, went to Texas, went to Florida, and now in Michigan, and, all over the place, right? So that's where we discovered, let's go to the commercial space. And multifamily caught my attention 16 years back. So that's when I spent a lot of time and energy and money with our coaches and mentors to learn the tricks of the trade. I didn't know anything about LOI. I said, what is that? Letter of intent, cash on cash. I didn't know nothing, literally. And now I teach. Oh my gosh.
Incredible. Now, what you say kind of resonates here because it's a consistent story that we hear from our friends in the US, active operators who started out in the single family space, buying single family and scaling their business, realizing that at some point it didn't make sense and they moved on to commercial real estate, multifamily in particular. Unfortunately, where we're located in Vancouver, Canada, and also in other larger cities in Canada, it's very difficult to invest in single family because the single family prices being so high, and there is not really any options. So the median home price at 1.3 million here in Vancouver, similarly also in Toronto, is very difficult to buy single family and create a business out of it. Also, furthermore, because of the extreme low rent to value ratios that exist, if you do buy a single family as a investment property, the rents are so low that you can't even pay your mortgage payment. So that's a difficulty that Ava and I saw right away, the pain point for investors. So that was our impetus to start in the multifamily space. But yeah, I just wanted to kind of jump in and say that.
Rightly so. Oh my gosh, that's definitely is a big desire to invest then in the USA market. Like you are saying, limited partners or general partners and all. Yeah. No,
Yeah, Vinny. And I was going to say, maybe you can tell us about your start in multifamily and why did you believe in this asset class so much? And why do you believe in this asset class still?
No, it's amazing because we were having so many single family homes, so many roofs to take care of. Of course, you have to, each transaction is a different loan from the bank. So you got limited to how many single families you could buy and rent. And then you have all different states. So different property management companies are hired to manage them also. So when I was introduced the idea to get 20 homes into 20 different dwellings in one area, like 20 units, let's say, only 1 or 2 roofs to take care, one transaction, the scalability is there. We can also say economies of scale and having a part-time manager to take care of collecting of rents. So, getting away from the toilet trash, and tenants kind of situation, that's when multifamily made sense. And then the other big factor was the vacancy, because in single family home, if somebody leaves, you're 100% vacant. And you have to turn the unit, you have to pay somebody to lease it up again. So you lose so much time. In 20 units or 30 or 100, now we are buying 400 units. If only 5 residents leave, there are so many left over, almost 95% still occupied. So the risk is much less in multifamily as compared to individual assets,
Yes, for sure. And not only on the active investor side, kind of groups and teams like us, but also on the large institutions. They love multifamily. Multifamily seems to be this wealth building machines that even institutions invest into. Now, we bring in the value add component. A lot of institutions, when they do buy multifamily, there is no value add. They just buy, they park their money there, the market appreciation and the cash flow. So
and use it as a hedge against inflation and so forth.
Currently, exactly.
So true. So true. No, value add is a big function in the multifamily. I know in the early years, I couldn't raise much money. So I was buying C class, C minus even, and then C plus and B minus. There's so many different classes. But as we can raise more money, getting into a B class and B plus or A minus is a tremendous opportunity for risk averse. And then the passive investors can realize great gains because the business plan calls for increasing of the rents and reducing expenses and doing cost segregation. That's a huge one, to get all these paper losses. I mean, the whole LLC is positive, making a ton of money. Investors are getting paid. But then when we do the tax time comes, it's a pass-through entity. So all the cost segregation, big dollars in negative, makes the whole LLC look like it's in loss, but actually it's making money, So those things are
so many incredible benefits for
sure. Same thing for our Canadian investors as they invest with us because of the flow through concept that you mentioned, Vinny. They also be able to get cash flow, and the cash flow is tax free for the period of until the capital event when the asset is eventually sold. But very interesting items here.
Yeah, definitely.
And Waterfall too, like once we have increased the value so much of the asset, I love that. Then, it's the dead money, right? Dead equity, because then you can refinance and get a new loan, have a Waterfall and give some portion back of the capital.
To the investors.
Exactly. On that point, that's very important because a lot of people, a lot of people who are not very sophisticated when it comes to real estate investing, particularly multifamily, they have this misconception that multifamily is assessed same as single family, and that's not the case. These multifamily assets are looked at as purchasing a business, like a business.
Yes.
So they're looked at. What is an important number is that NOI. If the NOI is there, depending on the cap rate, that's what constitutes a price for an asset. So when we come in and Vinney speaks about increasing that NOI, is in fact to increase the asset value, and it's truly a tremendous process to.
So true. Just the revenues, if we could bump the rents with the forced inflationary year like that, or also providing more service to the residents as we take over, and then or renovating units and all, then the bump in the rent will help revenue increase, and then we really get ourselves to reduce the expenses. Of course, the property taxes, if we can contest them, the insurance is a big one. And of course, the administrative cost and other marketing, things to increase the total net effect of the revenue minus expenses, NOI. And then the best thing is when we buy in the good areas where the compression of the cap rate happens, then it's amazing equation.
Big opportunity there.
Just listening to Vinney speak, this is the type of general partner you want to partner with, because he comes up with creative ways to increase the value of the asset. And that's what limited partners want to look at. Exactly. A GP who comes up with creative ways to increase the asset's value, in turn giving bigger checks to their investors.
Yeah, the investors win.
I would love to give a couple of examples, if I may, because it's really the truth. We just purchased a property, $34,750,000 in the Domain area of Austin. Austin is on fire, as you all know. And we bought a property, Princeton Park in Florida, near Melbourne. And we were collecting 98% of the rents, even when the COVID happened. So mind thinking, right? You say, oh my gosh, engineers, all them, nobody's leaving. So I said, let's go to Austin now, because that was coming home for me. I was in Austin 10 years back. I bought lots of properties in San Antonio, San Marcos again, and I sold them. Literally, this one asset which we bought, by the way, it's ours now, Renaissance at the Park, 308 units we bought. And the broker remembered me. He says, Vinney, I know you. I said, what? The listing broker. He says, you were the easiest guy to work with. I said, what? What are you talking about? Michael. And he was able to tell the seller, hey, Vinney, I know him and blah, blah, 15 bidders. And we lined up the deal. We closed it in 56 days, got 2.68% interest from Freddie. Fannie and Freddie were fighting to give me the loan, my partner and I loan, and we got 2.68. And the best thing, which I want to kind of solve is, we just bought it about a year back. It's gone in value by 12 million. You might say, why? Because the cap rate reduced. And we increased the NOI. So we are just talking about those two things right now. We got for 113 a door. Now they're underwriting 153 a door down the road.
Wow.
I mean, it's just amazing.
Congratulations.
Congratulations.
That's really exciting.
Congratulations to your investors.
I know. Our limited partner investors are going to make bundle of money, which is exciting. I've never seen in 14 years. I never bought a property which increased by 10 to 13 million, almost 33% in 1 year.
That is amazing.
That's amazing. It's totally amazing.
And as a general partner, Vinney also goes in there and he makes a better community for the tenants to live as well. So I wanted to point that out as well, because you have that under control.
Totally. We put the fence around the pond. We had the leasing office. We already had good game plan. Then 104 units out of 308. We're going to renovate them also. So all those things are going on simultaneously. The signage is changed. I mean, we have to let the passive investors, because it's their hard-earned money.
For sure. And let's talk about that, Vinney. Let's talk about the passive investors, because that relationship between the GP and the LP is very important. And
no, that's a great point, August. Vinney, us being in the real estate private equity space, or as others like to call it, real estate syndication space, we're we're the stewards to our investors, right? So the investors put their trust in us to find the best investment opportunity and manage that investment opportunity correctly. So maybe you could tell us about this very close relationship with
One,
investors. Tell us about the process
1000%.
of cultivating and
1000.
nurturing them.
Totally. That has been really taught to me. And then again, my nature has been also very much we have fiduciary responsibility towards taking care of the money of the investors better than our own money. That's how I say. And transparency and really opening up and educating the passive investors. So I love to do this. Once we close the property, we meet in 1 month in a Zoom meeting, invite all the investors of that property and go over the closing statement line by line, and make sure that the investors see that we purchased the property, bring the personnel, their pictures. This is our community manager. This is our leasing, agent or assistant manager. This is our, the HVAC certified technicians. So all those things are important to bring the property to investors in a quarterly meeting. But in the first part of acquisition, I do it every month or every 6 weeks, just to kind of let them know that their money is put into a good use. And I record them. We record them, and then we send the link out to all the investors of that asset, because not everybody can come, right? But then it's an open platform. They could ask any question and everything. And then we also bring pictures of the asset, brand new pictures, which we have traveled there and all. So we bring the asset to the investors, passive investors, during quarterly meetings and things like that. And then we have portal. Of course, we use Appfolio. Appfolio is a great investor portal where our investors can log in and they can see their money in every asset, how much they put in, how much they have gotten back already in the cash flow. So every quarter it's updated. And then if we have given them capital back, then they can click on the document side and look at each property's pictures, newsletters. They could look at the K1s, of course, when they get the tax time. Yeah.
Excellent.
That's great. And then how about cultivating and nurturing relationships with investors?
Yeah, and just to add to that is a lot of times we do a lot of work to go out there, meet people at different events, at kind of educational content we create, and a connection is made. Of course, we'd be happy for you to talk about how you make those connections, but it's also important to nurture those relationships. The different operators do it by sending a lot of free content. So talk to us about how do you go about cultivating and nurturing relationships with investors, Vinney?
Very nice, very nice. Again, let's look at the psychology of the investors, right? Passive investors, it's their hard-earned money. If it's 200,000, 500, a million, some of our investors have close to $4 million with us now in different assets, one investor only. Then they tell their relatives, friends, brothers, sisters, all of them. So our whole 400 investor circuit is a pretty strong, tight. They haven't really come from outside social media or like that. They have just been building with us over the years and gotten 20, 30, 40%. I've given highest, IRRs of 43%. That means every year with the cash flow and the equity gain, once we sold the property, they realized for 6 years, if they gave me 100, they got 40,000 back each year.
Wow.
So had some good runs, which we're going to have a very big run in the Austin property. Of course, I know we are planning to sell our Bentley. 2 years back, we bought it for 52 million. There's some here in my notes or something. I'm holding it there. But that is going for 67 million. What? We purchased in 52 million 2 years back. 67 million, that's 15 million more.
Wow.
And people are, telling us even off market, talking to us, can we take it from you beforehand? We are bringing out in the open in about 2 weeks or so anyway. But Princeton, we're going to keep. But, the key thing is to buy right. I really believe that. Don't really go for manipulating the underwritings, I call it. I have my very strong underwriting template that I have honed in and lots of different, formulas and all. But we got to take care of the numbers, actual numbers, and be conservative in assumptions. Because the OMs, operating memorandums from the sellers brokers, let's say, they want to make it the best of the best and give you all these different rosy pictures, but you got to figure out, are these true assumptions or not? How would you run the asset? What will be your business plan, right? All those things.
Great.
So having the newsletter is very important, by the way. We are even now giving 5-page newsletter to the investors every month on these big assets, because a lot of money is tied up, right? 16 million, like in one asset, right? 14 million, another one, 17 million, another one. So we have investors who feel good about, reading and seeing, oh, okay, this is the real deal. What's happening with my money, right?
Great. Quick question for you, Vinny. So on these assets that have performed so tremendously well, as the general partner, as the sponsor, how do you go about making a decision between refinancing or exiting the asset, and how does that come about? Talk to us about that process.
Very good point. See, the thing is, I have always felt that the cheapest money is the lender's loan broker's money, right? Or the bank's money, or Freddie and Fannie money, right? So if I can give a cash flow of 9, 8, 7, 8, 9, 10%, but my loan is at 2.69 or 3 point, whatever it is, the ratio, the margin is so spectacular. When the money is in the property as debt equity, right? It's just decreasing the balance due. That's all it is. And you're going to wait for 7 years to sell it at a high price, but then pay off the loan, right? But if the property is making good money and there is cash flow which can take care of the excess mortgage, I call it, right? Because there is a first mortgage, then there is a second mortgage for the refinance dollars, right? So if that makes sense, we bring it to the investors in the investor quarterly meeting, and then we share with them, this is where we are. The value has gone BPO, we call it broker's price opinion, or broker's opinion of value, BOV, right? So that way we can find out a rough estimate, because appraisal has to be done. See, no bank is going to give us refi without appraisal. So once we have that delta, we could go to the investors. Is it okay if you could do a waterfall? Because waterfall is not a taxable event at all, because you're just refinancing, you're not selling. Selling of the asset is a taxable event. So that way return of capital is not, and they can get that money and even give it back to you again in another asset.
Yes.
So now they are owning this one and the next one. In my lifetime, I think we had 3 assets like that, where we returned every dollar to the investors. So they were making cash flow with zero investment now. So you take cash flow divided by 0 is infinity. So they were making infinity percentage.
Nice.
Infinite returns.
Infinite returns. Isn't that exciting? I love it, Vinny. Vinny, you know what? I want to talk about the book. You've written the book that you wrote. You wrote a book. There you go. Apartment syndication made easy.
Oh my God. Vinny's always got books on both sides. So. Maybe
you could talk to us about the idea of writing a book. How did it come about? And maybe a bit about your journey about writing your books, please.
Thank you. I was getting overwhelmed, to be truthful. And syndication can be very overwhelming, totally, with all the moving parts from, dealing with the brokers and finding deals and underwriting, then the loan process. And then, you're doing the qualification, the due diligence, make sure millions of dollars you're going to be putting your, signature on. So all those, then loan qualification is a big process. Not only that, you have only 60 days, usually 60 to 90 days to close on a deal. So having investor base is a huge part of the big thing. If you can go to the property and the investor's equity doesn't come on time, we're in trouble, right? So lots of different things. That's why I broke it down into 5 plates. Because I used to get really mesmerized by jugglers, in India. So I kind of took that analogy And I wrote it for myself, to be truthful. Thank goodness it's become international top seller. People like it and all. But the key thing is it just simplifies the process, simplifies it. And a lot of people are able to go from there into my academy where I teach also. Today is the day I teach 2 hours usually. And we have been recording this thousands of hours of lectures. Then I have online academy also where people can go through the whole line academy and without even conversing, they could do everything which I'm doing. So we have to,
That's so great.
Incredible.
Incredible, Vinny. Now, that leads me to my next question for you. How do you balance your time and energy and dedicate the needed amount of time to focus on all these different, platforms you're concurrently managing together? So that's I think you have your YouTube show, your podcast, your company, and of course your beautiful family. So how do you manage multitasking all these things?
Oh, thank you. Thank you. What I find is that I really believe in prioritizing. Everybody does. Delegating is my second thing, and mindset is my third thing. So I always had a card right there on my desk. You got to prioritize. Many times we spend a lot of time in the C's and D's and E's and F's. If I can take care of A's and B's and then delegate the rest, that's the best thing. But I always have to say, hiring the right people is the best thing, because people make companies. Buildings don't make companies. That's how I look at it. It's not the systems, it's the people. Quality people, pay them nice, handsomely, make them equity partner with you. This way they will really propel that side of your business to a new height. Like senior living now, right? Senior assisted living. I was sending out messages in the universe, I need a partner who could take me into senior living, because that is where silver tsunami is going through right now.
Let me jump in here, Vinny, if you don't mind, because the assisted living, senior living was a very important topic that I wanted to cover. So your background is in single family. You move on to do multifamily investing. You've done tremendously well, but at some point you have pivoted to focus on senior living, assisted living, and you're also doing very well in that sector as well. So talk to us about what was it about senior living and assisted living that interested you, and tell us more about this asset class and why is it, you were making a point just a moment ago, but tell us more about this asset class, please.
Thank you. There are 3 waves I feel they are going through in USA and around the world. One is millennial, of course, the Z and the X and Y, they're not liking to buy the product, the homes, but they're renting with nice amenities and all. So that's a big wave which we want to be on, which conventional multifamily and all. The second one is the immigration wave, where they can't afford. So then they will be also renting, which is again where the jobs are and everything. The third one is the silver tsunami wave. Now, silver tsunami is very, very prominent here. 10,000 baby boomers are turning 65 every day. So we are 54.7 million 65 plus in USA. I'm sure across the world, very big population too. And 10,000 more is added on every single day, which is increasing 70 years higher, 85 years higher, every day. So in the senior living, there are about 5 different ways you could tackle that market. One is just independent living, which is no assistance needed. And then golf courses and all, how people can, or very small investment of, if they need some prescriptions or transportation. So those are great on no limited, need driven is not there. That's about 2 different kinds. In the middle, there are 2 different, where it's assistant and memory care. So if somebody has a slip and fall, or one of the partner passes away, the life starts going down, or they cannot cook and things like that. That's where we felt our soft spot. And I'll share with you how I got in there. And the other side, on the right side, is the very, very strictly need driven. Those are like rehab centers, nursing homes, hospitals, and things like that. So we are not in that business at all. We are only in the assisted senior living and memory care. And I sent out channel, my like I believe in that, send the signals out. And I came from India at 22. My partner came from Pakistan at the age of 17. And he was selling medical supplies to senior livings and assisted livings, and he would cry at home when he came, the pathetic situation and the smelliness and everything, what they were feeding. So he got so angry. He says, I'm going to start building from scratch luxury senior livings. So that's when 3 years back we got connected, and now we are joined at the hip. We are building, our goal is $2 billion with a B of construction and managing and doing all these purchases of senior living. And we build our 5 to 7 acre of land with 4 to 6 courtyards where people can walk, 1 story, no elevators. And it's got dining halls with high ceilings. It's got spas, salons. It's got movie theaters, libraries, billiard rooms, grand pianos. I mean, you name it. It's got putting greens and swimming pools. So those are the ones we are building. And we are going to the states like Florida, Texas, Arizona's, Virginia's, where it's warmer climate kind of, where a lot more seniors are moving over there, right? So that's how I got started. Yeah.
It's really exciting.
And so this is ground up development project.
Yeah.
So you're building from ground up, and you're targeting regions where there's in-migration of seniors with warmer climates. Now talk to us about what is the timeline from start for people to kind of come into to be able to live in these properties.
Wonderful. Actually, we start from scratch. In other words, after we do the capture rate study and everything and looking at what's available in that community, we buy the land. We meet with the brokers. We buy the best land patch, 7 acres, let's say, or 12 acres even, which is near to the hospital and all those things, right? Then we do ordinance changes, because we have to go to the city halls and all, to the building department, give the architectural drawings, what we are trying to do. That takes us 6 to 9 months, by the way. So we do it at our dime. My partner and I, we are net worth and everything. So we do that. Once we have all the permits, we get the construction loan for about a year or 18 months, and then we start constructing. And we have general contractors and everything. We've done it 23 times already, 23 times. So we have done it. It's a cookie cutter kind of thing, and all the interiors look the same. Everything kind of looks the same, Hampton Manor is our brand. Hampton Manor Premier's Assisted Livings and Memory Care. And so that's where we are able to build it strongly with all brand new A++ luxury items. Deferred maintenance on this multifamily is zero, literally, because we just built it, right? It's A++ class. When it's about 65 to 70% built, and we have banners outside and everything, we start building the website and doing the application processes and all, and due diligence on the residents who will be moving into. Our goal is to have 50% occupied the day we ribbon cut and open it up. So, and the break-even point for assisted senior living is very low, by the way, percentage occupancy. It's 57%, 52 to 57%, as compared to 77% in the conventional multifamily. So we love that fact. We build only 88 to 92 units, no more than that, because we don't want it to be a commercial, like 2-story, 3-story. We don't believe in that. We want our seniors to go out in the yard, plant some vegetables and fruits and all, have good air, do the ADLs activities, daily living, all that. And then, of course, we have like I mentioned, spas and all, and the movie theaters and all. So it's a community. It's different than multifamily, where the residents just get into their unit, then they go to work and come back. These are the residents who are there 24 hours, and we have caregivers 24 hours. We have 1 nurse available, no doctors. In our cases, we don't need doctors at all, and no medical equipment whatsoever, only dispensing of medicines, which are locked on all that. So we have a software for all that,
Got
Yeah.
it. Got it.
Incredible.
Now there's an item about obviously being an active investor. And my perspective, and one of the reasons I fell in love with multifamily was that the management could be contracted out to property management firms. Some sponsors also have a property management. They're vertically integrated and they have a property management team in house. But in most cases, the property management is contracted out to a third party property manager in multifamily. Now, with assisted living, this concept of you were talking about the nurses and other employees, common sense tells me that that's not something you could subcontract it out to someone else. And does that make the process of management of such facilities more cumbersome and difficult? Talk to us about that and how that all works.
Very good point. Very good point. Actually, we are vertically integrated. In my lifetime, in 16 years, I started a partnership with a person, and we had acquisition company and management company. Then I started Monil, which is our kids' name, Monica and Neil, together. And that we started in 2014. So it's only 7 years old, our company, the new one, which has taken like strides, but that was also vertically integrated. So we always manage. Now we have sold assets. So we have gotten Bell partners, wonderful, wonderful people, and they manage, I think, 70,000 doors. And now we have RAM partners in Tennessee who are also going to be managing. So we're going away from the conventional managing side, right? But in the senior living, we feel we could really do the best experience if we manage ourselves. So we have our own directors and personnel and chefs that we hire, everything vertically integrated, actually, and we are managing about 14 centers now, 14 communities, but there are some operators, by the way, that you could give to your already built assisted living, senior care, to an outside, company also. There are companies like that. But we want to build our own brand, Hampton Manor, and that's what we are doing.
Awesome. Great.
That's so great.
I'll get to my next question here.
Yeah.
I was doing some research. Obviously, I'm always trying to educate myself on the multifamily and real estate private equity. And I stumbled on a video with you and a fellow named Corey on YouTube, which someone you mentor, I believe. So talk to us about that. Talk to us about, as you say, generations change for you. Obviously, you have now your daughter involved in your company as well. How do you go about this concept of mentoring others and passing your education to others that are looking to come up in the space?
Oh, sure. I always believe giving back to the community was given me so much. And that's why I started. I was answering a lot of questions from a lot of investors, and I was answering them the same way. I was repeating myself. So 7 years back, I think, or 8 years back, one of my good friends said, Vinny, start recording, start doing everything. So I've recorded 1,000 lectures now on all aspects of what I do, everything in practical way, and I put it into online academy so people can go through everything and they get all the docs on silver platter, everything that I've designed through the online academy. Second level is where they get group coaching from me, which is like every Wednesday, 4 to 6 p.m. We meet, and you could bring your deals. We can go through, putting holes in there. You could have questions. I mean, it's just open forum. And we have certain, guest speakers coming also into coaching. We record them too, all of them. And then the third one is personal coaching, where I do it one-on-one to move people, to syndication. Some people have done in 3 months, 2, 3, 4 syndications. It's amazing. Wow. So those are the 3 levels of my academy, and I just love it. I love it. I don't have coaching, I don't have coaches, I should say, because I just believe, it's my passion and I like to deal and so forth. And it's not a big segment of my business, but I like to just, give back. Yeah.
Love that.
We'll be wrapping up pretty soon here, but we have a couple more questions for you.
No, that's so good. Vinny, I love that your nickname is Smile. And every one of the videos we watch, you're always so enthusiastic and full of this life and energy. So maybe tell us about how the state of mind and the importance of having a positive and happy energy when doing business or anything else in your life.
It helps so much, so much. That's why I wrote this book, which I'm bringing a revised edition to this one, because the book came out okay. I want to put more into it. But the key thing is, it's all the mindset. I really believe you could learn so much and so much and so much. But if the mind is not right, we won't be able to move faster on the track to success of whatever goals we are setting for our life. So mindset is the big thing. 80-90% of the things happen right here, whether bad or good or like that. So I used to be okay guy. I was a goal setter when I was young. So my friends tell me, but when I came here to USA, of course, I read the books from Napoleon Hill, Think and Grow Rich, to, Vincent Normal Pool, and then, of course, How to Win Friends and Influence People, Magic of Thinking with W.J. Schwartz. I mean, there's so many books and podcasts. So I really believe, Eva, that we should be really putting more money to train and put the best things over here, like we put so much money underneath, from the mouth down. We love to have steaks and this and spend hundreds and thousands of dollars, right? So we should be investing in ourselves from the neck up, like Zig Ziglar says, stinking thinking between the 2 ears, remember?
Yes, yes.
I really believe that, one has to make a decision internally. Externally, people cannot change people. I cannot change anybody. But if we make a decision that, I want to be a little bit more positive, I'm going to look at the spin of positivity into everything I look at it. Silver, on a dark cloud, right? Silver lining on dark cloud, like we say, and all those. But the thing is to just I read Miracle Morning, right? Hal Elrod, our friend, he wrote that book, Miracle Equation, also another one, and Eckhart Tolle, Power of Now and the New Earth, and I mean, it's so many great books out there which can set our mind right. And if the mind is right, if we are right, the world will be right. I believe that.
I agree. I totally agree. I love that so much. Incredible. Thank you so much for sharing your knowledge with us, Vinny. We really appreciate you. And we're excited to start the next segment of our show with you as well. And that's going to be the 10 championship rounds to financial freedom. So I'm going to ask you a list of questions and whatever comes top of mind first. All right, we're going to get started.
Sure.
Who is the most influential person in your life?
I have been a lot of mentors. All these people I talked, they didn't know me. And I'd say another gentleman, a billionaire, Spencer Hayes, has been a great influence in my life, who are executive director and owner and a billionaire. And also my grandpa, who lived to 94, and my grandpa from my dad's side also. So those are my great mentors. And
Perfect. Oh, this is going to be a good one. What is the number one book you'd recommend?
Oh, I would say Power of Now. I don't know why. I say Eckhart Tolle's book, everybody should read. Even our children, right? Neil and Monica, we brought that book and had 3-4 copies laying around in the house. We knew they will read it, So, no, that's a great one.
Okay, great. If you had the opportunity to travel back in time, what advice would you give your younger self?
Oh my gosh. I was a motivational speaker actually for a long time, and I stayed with one company long time. My shares went 6,700% up, which is good. It's a pretty good, but then I put a lot of toil into it. I would have gotten into real estate quicker instead of 15 years for multifamily, maybe, earlier, but I never repent on anything. Not even 30 seconds back, because I cannot change it. So I just concentrate on today and tomorrow.
I love it. I love it. Now, what is the best investment you've ever made?
Oh, marrying my wife.
Oh,
Literally, I mean, 41 years we got married, and, she's been a blessing to me and, 2 children. I think the family is the biggest blessing I can really be grateful for,
what's the worst investment you've ever made?
Oh, worst investment. I don't know. I'm sure lots of them. I'm a shopaholic. Actually, I love to buy clothes and things. And I think worst investment, maybe I bought some. Oh, I lost money in stock market, 791,000. I remember in the crash of 2008. So maybe if I had more knowledge, I should have pulled that money out.
Okay. How much would you need in the bank to retire today? What's your number?
Oh my gosh, I've passed that number many times over. But I would say, maybe 10 million is a good number, But of course, if you want a more lavish style than 20, then 30, then mine is 100 now. But let's see.
Okay, right on. If you could have dinner with someone dead or alive, who would it be?
Oh my gosh, wow, I have so many great mentors. I would say, gosh, somebody who can really uplift me, and give me some great advice, which I can hone in. And I really believe, I mean, the books we read, if we don't implement those good things we learn into our life, then is no reading of, I don't know if I can think of one person, but I'm sure there'll be several.
I love it. Perfect. If you weren't doing what you're doing today, what would you be doing now?
I'll be doing exactly what I'm doing today. Literally, I will be 70 years of age. Next year, I just turned 69, but I feel like I'm just about 26, 29, and it just motivates me to really give back. And, my goal is 2 billion, and which is a big goal, like BHAG, we call it, right? Big, hairy, audacious goal in Built to Last book, But the thing is, if you just send those signals out, and you can get some great partners who can bring equity in the construction. We could start 30 projects, like that. Yeah. I mean, in a year, 30 projects.
Incredible. Vinny, book smarts or street smarts?
Street smart, street smart. I think the thing is we got to really learn from the books, but apply, move the needle. I talk to my students and investors all the time. What did you do last week from last Wednesday to today? Like I'm going to be asking today, this evening, what did you do? How many investors you talked to? How many brokers? How many deals did you underwrite? And if you're doing W-2, how much time you spend? So we got to move the needle towards the goals.
Right on. Last question. If you had $1 million cash and you had to make one investment today, what would it be?
$1 million right now, I have a lot of money now, we all have, but $1 million, I'll donate it. Really. I
Wow.
I just raised money for charity water just recently, and I'm going to be getting involved into some schools in Nigeria and all, and then in India and other places. So I just feel like, when you have so much, how much do you need, right? So it's good to just give back. Yeah.
Vinny, you're so wonderful. Can you let everybody know what's the best way to reach you?
Actually, my name is Vinney Chopra, which is V as in Victor, Inney, with an E in there, EY Chopra, Chopra. Chopra, you could Google me. And I have YouTube channel, LinkedIn, I'm there. Of course, Facebook, and also, my podcasts. I have 4 podcasts. So if you'd like to listen to some of the ideas and books, if you go to Amazon, Vinney Chopra, couple of books are there. I'll be putting another third one on senior assisted living. We are coming out with that one. Yeah.
Amazing.
Wonderful,
Amazing.
Vinny.
Yeah.
That's a wrap. Thank you so much.
Thank you for coming on, Vinny, and I'm sure people will gain a lot of knowledge from your wisdom and your experience. And you're always joy to talk in person. And every time I watch your videos, also, thank you for coming on today. We really appreciate you.
Thank you for bringing such incredible energy.
Oh, thank you, both of you. It's such a pleasure. We got together. You are doing fabulous job. I want to give you kudos. I know I see your postings and very, very beautiful, postings and knowledge and everything. So God bless you both. Yes.
Vinny, likewise.